Hi, this is Matthew Cratter from Trader University, where I teach people just like you how to make money in the stock market. Now, today we're going to be talking about PE ratios, price to earnings ratios, and I'm going to teach you some very counterintuitive things, and especially make sure that you stick around till the end of the video because I'm going to show you how you could have bought Facebook for a PE of just 2 or 3. Now, one of the common complaints I get about my stock picks that I'm trading is that they have very high PE. So here's Lululemon, for example, PE ratio of 48. We've talked about Netflix in the past. We've been trading stocks like Zscaler, for example. Zscaler is still losing money. They have negative earnings. And so you can't even calculate a PE ratio for them. Now, quick review, PE ratio, just the price per share of the stock divided by earnings per share. But you can also use market cap in the numerator, and then total net income in the denominator. These are two ways of calculating it. Now, one stock that we've been talking a lot about lately is McDonald's. I keep getting blowback on this one in terms of saying that its PE is too high. So let's look where its PE is. So PE ratio currently at 28. Price to earnings ratio 28. And what that means is you're basically paying $28 for $1 worth of earnings. Now let's take a look at, we're going to look at the value line sheet here for McDonald's. And you can see that the average PE for the last, call it 5 or 10 years has been 20. And so you can see right now this is, I believe, a trailing PE ratio. Either way you look at it, we're trading way above where McDonald's PE has been for the past few years. It's really been in the low 20s to high teens. Now you can see that in spite of this, McDonald's keeps hitting new highs. So I wanted to talk a little bit about this. This is a trap that a lot of value investors fall into. They want to buy low PE stocks. And I would suggest that buying low PE stocks rarely works anymore. The higher quality stocks are the stocks with high PEs. And the reason for this is because high PE stocks are building in the expectation of high revenue or earnings growth. Now, what could be happening with McDonald's? As a lot of you know, obviously McDonald's now delivery has really been picking up with Uber Eats, Grubhub, and all these different companies, all these different external companies. And what this means is that McDonald's revenue and earnings going forward should be much higher than they normally would have been in the past, where they were dependent just on stores and franchises. And so I would suggest that what the market is doing here, McDonald's has a high PE, or a PE that's above its 5 or 10 year average, but that's just because something has changed in the market. And now McDonald's has these new sales channels. And I think when we look back on this, we'll find out that McDonald's was not trading at quite as high of a PE as we thought it was. Now the reason for this is you can calculate the PE for the trailing 12 months. So you can use the last 12 months worth of earnings. And that would be the TTM, the trailing 12-month earnings. You can also calculate the forward PE, in which case you would want to use the current price per share, but you would use maybe next year's earnings. And these are two ways of looking at it. One is looking in the rear view mirror. The other is a more forward-looking option. And let me show you just how this worked with a very high PE stock called Facebook. Now, Facebook obviously has had a good run over the last, call it 7 years. And you can see that this is a chart of the market cap of Facebook. So the total number of shares outstanding times the current value of the shares at that point in time. And you can see right after its IPO, back in late 2012, Facebook was trading at a market cap of approximately anywhere between 40 and 60 billion. Let's call it 50 billion. So 50 billion market cap. That's what the market was valuing Facebook at in late 2012. Now let's fast forward and look at at this point obviously it was trading at a very high PE as well. I don't remember exactly, but its PE was definitely at its IPO was north of 100. We can say pretty securely. But let's look what happened to those people who paid a very high PE for this stock. What happened is actually earnings growth was much higher than anyone expected. As you can see here, I'm looking at a income statement for Facebook for the last 5 years. Net income is down here. And you can see back in 2014, the net income was just about 3 billion, 2.9 billion. Last year, 2018, it hit 22 billion. So what does this mean if we bought Facebook stock when it was trading at a market cap of 50 billion. Well, if it was trading at a market cap of 50 billion and we expected earnings to grow this much, if we expected earnings to grow to 22 billion, what we were basically buying Facebook at was a PE of 2 or 3. So we can take the market cap, 50 billion, divided by, call it 22 billion. 22 billion in net income in 2018. We were buying it at a forward PE of slightly more than 2. So it's very important to keep in mind that even though a stock may have a very high PE, it has a very high PE because the market is expecting the earnings to grow quite a bit. Now, if the earnings do not grow, then you are buying a very high PE stock and you're going to have a bad situation. This happened to many of the dot-com stocks back in late 99, 2000. Pets.com, these kind of companies never had the earnings growth that was being priced in. But if you can look forward and say there's a reason for this, this is a very good business, it's a low capital intensive business, you can find situations where high PE stocks can actually turn out to be value stocks because you are buying them at a PE of 2 or 3 based on where earnings are going to be in 2, 3, 5 years. So whenever you're looking at PEs, you always have to think in terms of growth as well. Is this a company that can really grow its revenues and really grow its earnings? Let me know what you think in the comments below. Please subscribe to this channel if you want to see more videos like this and be sure to be notified. And thanks a lot for listening. I'll see you in the next video.